You just upgraded your assessment of what Americans are going to buy this year, right? Retail sales are going up.
We did. We've had a great first half of the year, and we had originally forecast that retail sales would increase this year between 3.8 and 4.4%, and we've upgraded that now to a minimum of 4.5%. So we know we had a great first 6 months. The next 3 months, next quarter looks pretty solid. We don't know about the fourth quarter, so we know we'll at least get to 4.5.
And you think they could go as high as 4.8%? That would be a full percentage point higher than the 3.8%.
Yeah, that was the original forecast, the upper end of the range. And so we thought, okay, what do we know for sure? We know 4.5 we feel very strongly about. But in talking to the CEOs just in the last few weeks, I talked to a number of folks over the last 4 or 5 days, and everyone knows that we did better than expected these 6 months. We feel like we're going to continue to do well, but there are the unknowns. You talked about some this morning about inflation. What's that going to do to pricing? What's that going to do to consumer consumption? And what happens at the holiday season?
It seems an obvious question, but why are sales up more than you expected?
I think they're up because we know the benefits of tax reform and regulatory reform, and the fiscal stimulus in the economy has really started to show some positive effects. Consumers are very confident. Savings and credit and consumption are all up. We know that unemployment rates are low. So we recognize that that we can get higher than the 4.5%, and we hope we will. But you know, the reason we didn't put a top end on this, the way we have said a range before, I call it the Kernan, the ledge hedge, because last time I was here, he said, Matt, you're going to go off the ledge over tariffs and the administration. And so we're hedging a little bit on the upside. I think we could have, as we talked about a minute ago, we passed each other, we could have a Brooks Koepka finish to the year, or we could have a Tiger Woods finish to the year. We could be all the way in the money and have a really good year, or we could be just a little short, and a lot of that depends on what the consumers do in the fourth quarter and what happens to pricing till those really start to hit, and how much can be passed on to suppliers, manufacturers, how much do consumers have to eat. That's
a reference to tariffs, right?
Correct.
Retailers, yes. The vast majority of them, they import nearly everything these days. And so therefore, if there are tariffs on their imports, the prices of the products are higher. And yet Americans are still buying. Americans are still buying.
And I think that's because of the fundamental strength of the economy, and because the administration has gone out of its way to not impose tariffs on consumer goods. Now, we know this next round, and those that may be imposed in the future, we know they're talking about September, finalizing another list, might hit in October. Those prices will impact consumers later. A lot of that's already been pulled forward in the year in imports already as we get ready for the holidays.